Hey, just so you know, we got the snap shares and after hours dropping 15%. That's weighing on the NASDAQ immediately after the closing bell. Again, three things I told you to watch. Trump's tariffs, that's rattling the market today. I told you that was coming. Over the last 2 weeks, I told you Trump was going to rattle the markets with tariffs again. Told you earnings can do it. We're seeing that impact a little bit. Today was Snap, and last week we got that reversal bar with Microsoft. Remember, it rallied up, but then it got that reversal bar. Talked about that. Seen other weakness with Amazon and Apple. I told you to watch for Trump to rattle the markets with tariffs. It's happening. I told you to watch to see if earnings, as we're a lot of earnings last week, this week, if that rattles the markets, which we're seeing. Told you to watch the economic data. That is rattling markets with the jobs report coming in weak on a Friday, and then the Fed concerns about the tariffs pretty much canceling the September cut. Although the odds are now increasing once again, we're going to see a cut in September. I think it's around 91% if I remember correctly. But Snap, seeing the NASDAQ lower and after hours Snap dropping by 15% on a week on weak revenue. They missed on revenue, and in after hours they are down again about 15%, just under that right now, but we're down over 15% moments ago. That's putting a drag on the NASDAQ in after hours. AMD also showing some signs of weakness. We got weaker than expected earnings. Revenue beat expectations, but earnings was down. Earnings lower than expected, revenue higher than expected. AMD in after hours down 3.79% at the moment, down over 4% at the lows just a few minutes ago. AMD, Snap weighing on the market in after hours. And I do want to say sorry for posting a little bit early yesterday. I had something come up that I didn't want to miss. I just posted a little bit early. Today we saw the market, we saw futures rally up overnight, and then we filled the gap on the S&P, open and continued to rally a little bit, but then the rally fizzled out, and we ended up down on weaker economic data, Trump rattling the markets, and then now down further in after hours with our earnings after the bell. The Dow ended down the session 61 points. Almost 62, down 0.14%. The S&P was down just about 0.5%, just a fraction away from it, down almost 31 points. NASDAQ was down 0.65. Russell was up 0.60, and again, the VIX got it right. The VIX predicted yesterday's rally to the 10 period for a test. We went to fill the gap, and we got rejection at those levels. The VIX currently up 1.88% to close at 17.85. The VIX on Friday predicted there was a 95% chance that we would have an update Monday or Tuesday, 95% chance we would get a bounce or a bottom. I told you it was likely going to be a bounce. The VIX got it right. That's based on the historical data. When you get a close 20% higher on the VIX, there's a 95% chance based on the historical data that I've studied that the VIX will have an update for a bounce or bottom within the next two trading sessions. And it was correct. The VIX correctly predicted that bounce. Please consider supporting the channel today. These signals have been absolutely incredible. They have really helped me. I hope they help you. If you find the information useful, please consider supporting the channel today. I don't have any sponsors. I turn those offers down because I don't want to sell you stuff. If you follow the link below to take you to a secured site, you can donate any amount you want or make a recurring donation. If you do that, I thank you. And I just ask that you partner with me rather than trying to sell you stuff. Most YouTube channels get sponsors and sell you stuff. I turn those offers down. If you're not here to have me sell you something, you're here to look at my great indicators. They've helped me. I hope they help you. If you found them useful, please consider helping out by supporting the channel today. I thank you for your consideration for that. We had a reversal of conditions on Friday. We're rallying back up. We filled the gap. We're going to the 10-period moving average, and we're getting rejection. I'll be watching. Do we end up seeing the MACD go towards the center line or going negative? Does the oscillator end up going negative? Because the signal remains bearish, momentum is bearish. You have red bars, a red cloud, you're below the 10 period, that's a red line right there, getting rejection at it. And I think we're probably going to end up dropping below the 50 if we get a shallow retracement just under that level or something deeper towards the 200. But moving towards the 200 period, whether a shallow retracement or deep retracement, I think you're pulling back for wave 4. NASDAQ daily chart here. Same for the S&P 500. Again, you've got red going on from last Friday, even with our rally back up. Powerful rally back up to fill the gap, but yet you only have rally to fill the gap and a rally to the 10 period where we've gotten now rejection. So we'll be watching. Does this remain bearish? And if it does, do we take out this low and start moving to test the 50? And if we take out the 50, you've got your 200 down here at 59.05. 50 period is at 61.48. Again, I told you up here, I called a top for the second time. We probably drop about 405, 600 points or so. I think we'll resume the advance and go to new highs. Now things changed, but we did rally back up as the VIX correctly predicted we would. I told you, very possible based on the VIX prediction. So we'll be watching. If we now get rejection at the 10 period, if the cloud can continue to remain bearish along with the bars. Reversal with our negative divergences. Daily and the 60-minute chart, those negative divergences is being validated by the trend signals. Momentum turned bearish and the trend signals are bearish. As long as they remain bearish, we can go lower. S&P daily here, signals remain bearish. The signals nailed the previous sell-off and the rally. Now they've turned bearish again. Again, we're likely pulling back. Price of the S&P drop 400, 500, 600 points and then bottom out. Pointed out that my signals through the entire advance, ever since we bottomed out, and here's the reversal bar here with the launch of Trump's tariffs on April 9th. We had the bottoming signals, the 7th, 8th, and 9th, the key support. The signals have been bullish up until we had that bearish bell hold candlestick confirmed on Friday. Now the signals are bearish, just like they were bearish right after the February top, and we had this. I don't think we're going to have that right now. I think we're going to sell off, and then I think we're going to go higher, and I think we're going to top out in the coming months ahead. Absolutely incredible signals. I don't know about you, but that really helps me. My signals are amazing. Create my own indicators, and here I'm looking for trending moves. I think it does a good job. Had broken out above the trend line. Got a break out of the bullish falling wedge. We broke above the 50 period, the green line right there, gapping higher, and we went to the 200 and we stalled there. The Bollinger Bands have tightened up, telling us again volatility is likely to increase. The VIX is likely to pop higher, and again, it's probably breaking out and back testing. Here you've got an inverted hammer today, which is a bullish reversal right here at the 50 period moving average. I told you we can go back and try to fill the gap or back test or get a throwback towards it. So far we're getting a throwback towards it, but if I include the trend line right there, from this high, and I'm connecting this high right here to the previous high back up here, but if we connect this one right here and include the shadow, then you are getting a solid back test. And now, again, a close back above our 50 period moving average. And when you close back above the 50 period on the VIX, bad things start happening on the S&P 500. When you're below it, good things happen. Like over here, you're below it, good things are happening. You're above it, bad things start happening. Like back over here, the February high, we had volatility increase above the 50 period, pull back, and we got another surge in volatility. Again, getting back above that 50 period moving average. Here we've dropped below the 50 period moving average over here and held below it, consistently got rejection at it, rejection, and now we're getting above it. So again, we're likely getting our wave 4 sell-off. You've got the bullish divergences that I've talked about with the RSI, and down here with the MACD. MACD is right here at the center line, and again, with the MACD about to move above the center line, the RSI is above 50. Again, if you can hold above 50, you can get into positive territory. We can end up getting a bigger sell-off. Notice the RSI dropped below 50, held consistently below it through the advance with the market and the decline on the VIX, as you can clearly see directly overhead. Same thing, we got the bullish diversions, multiple point bullish diversions now on the VIX, multiple negative diversions on the S&P now playing out. So again, if we can move into the negative territory, should see a bigger surge in volatility. But again, let me repeat, I do not believe the top is in yet. I have been predicting get a wave 4 eventually, called a top last week. My first attempt failed. The second attempt was correct. 2 days prior to that, I sold out all my long positions. Again, I talked about building that short position, now playing out. 5-minute time frame, we gapped higher on Monday, went back up, ended up filling the gap today on Tuesday. A gap, another gap and trap, exactly what we've been seeing back over here, gap and trap. And prior to that, we saw the gap and traps. Got another one today, gap and trap, and we ended up filling this gap back over here. You see a little better on the 15-minute chart. If we lose the 200 here and the 50 drops back below it tomorrow, with maybe sell off with earnings, as we're seeing AMD down in after hours, we're seeing Snap down in after hours, and concerns about economic data, concerns about Trump. I told you Trump was going to rattle the markets with the tariffs. I knew that was coming, and he did that today. I'll show you real fast. Looking for a push below the 200 period and coming back to fill this gap. If we now have a gap and trap on the intraday chart, we lose the 200 period, then again, the counter trend is done. Look at all these gap and traps. Look at this. This is something. Again, talked about this over here as we're going into the top. Close my long position with the rally into the high, July 24th. Friday following, that was Thursday, Friday, Monday. Established my short position with the rallies into the highs right here into this divergence I was trying to play. One that's set up on the 60-minute chart. We ended up gapping a little higher. Got a gap and trap there. Got a another one when we moved above that level from Tuesday's high. On Thursday, got another gap and trap here on the 15-minute chart. And in other time frames like the 5-minute, 60-minute chart, intraday charts got these gap and traps. Now we're getting another one. And again, that gave us a reversal. That gave us that reversal bar, bearish belt hold. It was confirmed the next day. And then now we're gapping up as the VIX predicted. But we're getting rejection at the 200 period after filling the gap here, coming back, filling the gap on an intraday basis, and then gapping higher and getting rejection. And on the daily, the fill looks a little bit different. I'll show you that on the daily in a second. But again, 50 still below the 200. If we're just getting the counter trend, we need to come back, fill this gap, and take out these lows over here and resume the decline if this counter trend is now done. I told you over here, again, we might see a pretty violent move very quickly. The downside, that's why I sold a couple of days early, because I told you a top was coming, likely with the launch of the tariffs, the new tariffs on August 1st. Had that jam-packed week with economic data and the Fed earnings, and I told you again it was going to be Mr. Toad's wild ride, but we'd likely see a sell-off. This ended up giving us a bearish engulfing in the weekly time frame, by the way. We'll be watching, is the counter trend now done or not? And we do have a possible bear flag in play here if we end up breaking down, going back to fill the gap from Monday's high and try to take out the lows. Watching to see, is this move done? Do we get now rejection after filling the gap? Rejection here at the 200, rejection at the 10 period there in the daily time frame. 15-minute chart here. We're getting rejection at that 200 period in the 15-minute time frame. We're getting rejection at the 50 here in the 60-minute time frame, and rejection at the 10 period in the daily time frame. This is very, very common in these different time frames. The 50 here tends to act as support and resistance, the 50 and the 200, and the 10 period and the 20 period tend to act as support and resistance in the daily time frame, which again, we've rallied back up. We bounced off the 200 here, got rejection at filling the gap on an intraday basis, rejection at the 50 period moving average. Again, this is what I think is likely in play here, an ABC move lower. We've completed the wave 3. I think we're in wave 4. But again, it could be a shallow retracement. It could be something a little bit deeper. But I don't think we're going back to take out the lows in April. And then I think we get one more push higher. And then I think we go back to test the lows. And I think you'll get a much bigger drop than what we had over here, which I've been telling you since the day of the bottom. This is corrective. Chris told us that we were about to crash. And I told you this is corrective. That means the top is not in yet. We have an ABC structure. Bears needed a 5-leg push lower. We didn't get it. Major support there, as I talked about at the time. So I predicted new all-time highs. Still don't think we're done yet, but I think we're completing. I told you down here, we're going to finish, get the final phase of the blow-off top. That's what I think is happening. We're getting a pullback, much like what we have with wave 2 over here. We had wave 1. Primary wave 1, primary wave 2, I think primary wave 3 finished here, and now I think we're getting primary wave 4. Then I think you get primary wave 5, and I think that's probably going to be finished September, October or so. And then I think the stock market is going to likely put in a top, and that'll be followed by a crash to kick off the bear market. That's the way it's been done in the past. Crash kicks off the bear market. It's going to be bigger than this one in all likelihood. This was 21% on the S&P. My signals were warning we are going to go to new highs and warning that the top was not in yet. They were correct. I told you over here, the bears, Kramer and the bears telling us we're about to crash at the bottom. When I called the bottom, very day of the bottom, signals trigger, and I told you when that bottom happened at support, I predicted it would happen the week before. We're about to get a bottom with the tariffs. I told you these highs would be associated with the tariff peak. And Trump's not postponing the August 1st tariffs negotiations. There's still negotiations with Mexico and China and putting the finishing details on some deals. Heard telling us, oh no, these tariffs are going to be postponed and they're going away. And I told you, again, the tariffs would mark a bottom over here. These tariffs would be associated with the top. I told you it could be one of the catalysts, or, could be a couple of different catalysts, but so far that is correct. And I told you we'd likely top before August 1st. That's why I called a top in late July, right before it happened, the day before it happened. On Tuesday, I was wrong about that. We went a little bit higher. Second attempt was correct. I think it's just a correction. As I've said, I'm playing these divergences that I've talked about. Just rattled the markets today. Again, concerns about high tariffs coming on pharma, and concerns that those tariffs could eventually go up as high as 250% based on the president's comments. CNBC. And then concerns about a new tariff tariff on semiconductors, new plan coming as soon as next week. I told you Trump was going to start talking about tariffs once we got up to new highs, approaching that August 1st date. I was correct. Does the April date marked a bottom? This August 1st date marked a top. I told you we were going to hear more about tariffs, and it was going to rattle markets. That was correct. Everything I've said about tariffs has been 100% right. Trump's tariff talk rattling the markets a little bit of economic data doing that as well, and now we're getting earnings and after hours. Could put pressure on the markets tomorrow. Last Tuesday, I called a top in the market. I told you I thought we had likely topped. When we made new highs, again, when I called the bottom, I told you to be watching for new highs. I was correct about that, and I told you I was watching for a top. But we went sideways in July from July 3rd here, and I told you seasonality played out. Be watching the upper Bollinger Band for rejection at it, which is what happened. We got rejection at it that Tuesday. Top, but told you could still be wrong, but I have the guts to tell you what I think. We went down. There was no confirmation of the bearish engulfing, and we went back up and we got this candlestick, which is a belt hold candlestick. There's no topping tail on it, happening at the end of the uptrend, and we went to a new high 18 points above that peak where I called the top right there, and I called a second top right there. No confirmation of this bar. I believe that this was the top. That bar did get confirmed, and now we're going back up and filling that gap. So again, I believe that we're correcting back towards the 200 period moving average down here, the 50 period somewhere in between them, or this cloud down over here. But getting rejection off that Bollinger Band, we did in December, January, and February at those peaks. If I just zoom out here, you can see it. Again, we got rejection at the upper band here in December, January, and then February. I think you're going to see a top very similar to this. I think we're going to pull back, but then I think you're going to go make a new high. Probably a bigger rally than what we had over here, just moving slightly above the December and the January peak. But I think you'll get a bigger one, and then I think that will mark the top. My second attempt to call the top was correct. Called that as we broke down here. Again, we got the bearish engulfing. We began to break the trend line from these previous higher lows that set up. I told you we still might try to back test. We talked about that, or hit the upper boundary of the rising wedge if I was wrong, and we ended up back testing and getting rejection there. So again, called a second top, came down to support, dropped below the 10 and 20, confirming that reversal bar with our back test. And now we have a possible little inverse head and shoulders here. This tiny inverse head and shoulders measures down to the cloud towards our 200 period moving average. So again, this is what I think is likely under construction. It may be a shallow retracement. It may be something a little bigger. I told you towards the 200, to the 200 in the cloud, or just beyond the 200 period. You got some gaps in here. You got a gap over here that, again, could get filled. These other gaps could fill at a later date. But again, I think you're headed here towards the 200 period, and maybe it's a more shallow retracement. But the little head and shoulders here could take us down towards it. Minimum objective target is to the cloud just above our 200 period moving average. It could be that we see the MACD go down to the center line by the time this is done and bottom out just around the center line or just under it to mark a bottom with our divergences playing out for the wave 4, which is what I believe is likely the case. But let me show you this up close in the daily time frame. Again, here you can see the back test, the breakdown and the back test of the rising wedge. Now we're rallying up to the 10 period. Look at the red line. That's the 10 period. And we're getting rejection, filling the gap, getting rejection at the 10 period, getting rejection at the 50 period on the 60-minute chart. And again, if this plays out, then we can see a sell-off and take out the neckline of the pattern. If that happens immediately, then you can move towards our 50 period. If you take out that, you've got our cloud, and then you got the 200 down here. So these are the levels I'm watching. Again, I believe that we're going to correct, but I believe we're still not done with the blow off top. I think you'll get the final climax move of the blow off top once this correction is done. I was successful in calling the very day of the bottom and predicting this rally, hitting major support, and I showed you the resistance levels that we hit in the daily and the weekly time frame here, and here with our rising wedge, the back test, correctly calling the top, but it was my second attempt that got it right. My first attempt did fail, but I always tell you what I think. I have the guts. Very few people have the guts to tell you what they think. Most people predict things after they already happen. I try to predict things before they happen based on mathematically based indicators and support resistance levels and moving average. When we rallied up to new highs, I told you I was looking for a top, but I had not yet called one. There it is. I had not yet called one until that Tuesday date. That was wrong, but this peak from last Thursday, and by the way, we didn't close above that high. It was just an intraday push above it. We went 18 points above it, but that was correct. And I think, again, this is just a corrective move. So again, for my signals to tell me when this is over, and then I think that we'll end up going high. Now, my signals are now validating this and are rising back up to the 10 period, rising back up to the momentum cloud. Momentum cloud had turned red here. Get rejection off these levels. Again, I'll be looking for a bigger sell-off. I'm looking for a bigger sell-off. Let me repeat. Are you listening carefully? It still just may be a shallow retracement above the 200 period moving average. So keep that in mind. No, bears that told us we were going to crash at the bottom, and this rally wasn't going to happen, and they've been telling us bear market rally all the way up, which I told you they were going to say, and I told you now they're going to say double, triple top, and all the rest of it. Likely are going to buy more time. We still have an inverted yield curve. It tried to uninvert, and then it went back to inversion. Being an inverted yield curve again, we likely have a little bit more time. The inverted yield curve is a recession indicator, still inverted, telling me the recession is not here yet. And these people down here that were telling us, oh no, we're already in the recession. Way up. Again, they've been telling us, oh, the negative GDP, that's going to crash the market. Moody's downgrade, that's going to crash the market. I told you we are eventually going to new highs. I was correct. I'm predicting a pullback. The bears are now telling us, the bears that told us the rally was never going to happen and that we were going to crash at the bottom, they're now telling us, oh, here we go. And eventually we'll get a higher low and we'll go up one more time. The bears will throw in the towel, many of them. Will get the herd good and complacent. And because we're likely going to get a higher low here, as I'm predicting, that's going to put the herd back in a complacent emotional state, because they'll believe, buy the dip, buy the dip, buy the dip, buy the dip, buy the dip. And again, the herd down here was agreeing with the bears, and then up here, bulls telling us, no way we're going to sell off. It was attacked up here, daring to believe that we could possibly go down. The same people that told us we were never going to rise and were bearish down here, these are the same people that were super bullish here at the top. I have a lot of great indicators, but the herd is my best indicator, because they see everything through the lens of their emotions. Can't step back and look at things objectively. Now again, I think we get a pullback. I think we go to new highs, but possible little miniature head and shoulders here, a little tiny bear flag on the 15-minute chart if we start breaking down. We'll see what happens if we get rejection at the cloud in the 10 period here. Marubozu candlestick, which means bald in Japanese because there's no topping tail on it. I told you that's a reversal bar. We came down. We didn't engulf the previous day, but in the weekly time frame, by the way, but the bald candle at the top, no topping tail, and it reverses. This is a bearish bell hole candlestick when it happens at the end of an uptrend, which it did do. It needs confirmation and a follow through. We did get confirmation. We'll see if we get the follow through, taking out last Friday's low on August 1st, the launch day of Trump's tariffs. Now, I told you to expect a rally based on the VIX predicting that day with a 21% rally on the VIX, the decline on the S&P, that the VIX was predicting a 95% chance of a rally. In the next two trading sessions, the VIX was correct, and we had this big rally back up. But I told you to be watching the gap fill, be watching the 10-period, 50-period moving average for previously support. Now they're resistance, and we got rejection right out there. We fill the gap on an intraday basis. We got a dark cloud candlestick gapping higher, but then closing over halfway or up to halfway with the previous day's bar. That's a bearish engulfing candlestick. You want to see about half the candle close into half the previous day's candle. We did get that, getting rejection at the 10-period moving average and on the daily chart, the 50-period on the 60-minute chart as we're doing that. So again, this could resume the decline. If it does, we get rejection at the 10-period, we need to come back and take out this low, and we'll have that confirmation and follow through, and then again go down to the levels I'm talking about. Whether this is going to be a shallow retracement or a deep retracement, my indicators don't tell me that. I think it is wave 4 that's moving towards the 200. Now, if it's a more shallow retracement, we won't take out the 200. We'll move just probably beyond the 50 period. But if we get something uglier, we can either hit the 200 period or move just below it and maybe fill some of the gaps that I've been talking about. I warned you since July 3rd, we were going sideways there for a couple of weeks, but we still might see the seasonality play out and complete a top surrounding Trump's tariffs and all the economic data and the Fed and everything else that we had last week. It was a lot for the market to digest. I told you going into that week we were likely going to see wild swings up and down, and we surely did do that. I told you, again, we might see the July seasonality play out and get a peak in late July, which did in fact happen. We're seeing the seasonality negative here in August. I think we're going to see an August bottom, and I told you we can sell off for 2 or 3 up to 3.5 weeks or so and see a bottom later in August, and then I think we'll resume the advance and go to new highs. I think the market will top likely in September, October. It may take a little bit longer to reach my target levels, but again, I've talked about the trend lines in the weekly time frame where I think we're headed. I told you I think we can go to 66 or 6,700 to reach those trend lines, but right here we're hitting major trend lines and turning up. But again, the seasonality over here in July playing out did go sideways. It didn't play out perfectly because we rallied into July 3rd and we went sideways for about 2.5 weeks or so. You're going to see that sideways price movement. We actually went sideways, and then we tried to pop above it, and we ended up back testing that level. So it was about 2.5 weeks with the breakout and the back test. It initially failed, and then we inched higher. And I told you again to be watching for top in this area because of the divergences that were forming on the MACD and the Awesome Oscillator. The RSI had reached extremes. I warned you we were at readings of 76 and 77. I talked about this at great length and detail. Get the, this time it's different crowd. And again, the same people, they're heard agreeing with the bears down here. We're agreeing with the bulls up here. No possible way we're going down. And yet, here we are selling off. I think we're going to end up seeing something like what happened over here, this divergence that ended up forming. I think we're going to see something similar to that, but I think we're going to end up going a little bit higher than what we did over here towards the trend lines I've talked about in the weekly time frame. So again, wave 4, wave 5, it may not be as deep. I've just marked it down here towards the 200. It may be a more shallow retracement. We'll be watching for clues. And I do think you will go and make a new high in September or October, and I think the market has a good shot of topping in September or October. A good shot of completing the bull market right about this bottom, right about this top. Warning you, we're going to happen. Right here, we're turning off of a trend line. Not only the trend line here with this breakdown of the rising wedge, but also the trend lines I talked about in the weekly time frame previously before the sell-off began, that we were slamming into these trend lines. It hit the one from the 2023 low here with our linear scaling, and we slightly overthrew that, and we're getting rejection off of it. We got a bearish engulfing last week. Eventually, I think we're headed towards these upper channel lines here. This is a channel from the 2020 low with the linear scaling, but we're getting rejection after just slightly overthrowing that, but we slammed right into the log scaling trend line. This is from the 2023 low. Let me show you the trend line, the 2022 high, and here we got rejection right at that trend line, right on the nose with our log scaling. And we got that bearish engulfing last week. You can see that right here. Again, I think we're moving back here towards the 20 period moving average, towards the 200 in the daily, and then I think you're going to eventually head up to this upper channel line here, or the upper channel line on the other chart with our linear scaling. They're very, very close to one another, near 66 or 6,700, and then I think the market's going to top. Absolutely incredible. I had somebody tell me right around 2 weeks ago or so how stupid I was for thinking that price can turn off of a trend line. And yet, again, we talked about this trend line as we were going towards it, and we talked about that other one in the linear with the linear scaling. And I told you if we tried to reach, go higher and reach the boundary of the rising wedge or back test it, you could see this tested. That ended up happening. Eventually, I think we will clear this trend line and go to the upper channel line here. This is a channel from the 2022 low. The other one's from the linear scaling with the channel from the 2020 low. These are the levels where I think we're headed before we top out. I'm predicting this pullback. I am predicting a higher low. Again, eventually, I think we'll come back and take out these levels. If you look, when I called the bottom over here with our linear scaling, we slammed right into this trend line right here. We hit this 2020 trend line, and right there it is with our, let's see, our red trend line there. We slammed right into these levels of support, and that's why I told you we have bottomed and we're going to go make new highs. I was correct. So again, I think we're going up towards 66 or 6,700, as I've said. The 6,400 area, we hit these trend lines of resistance, again, likely just pulling back. Again, having this divergence having formed again, I believe that we have the wave 3 done here on the 60-minute chart. We reached an extreme at the 200, got back up above the level of 50 on the RSI, but then got rejection at the 50 level, just like the S&P, rejection at the cloud, rejection at the 50. So I think, again, you're getting this wave 4, whether shallow or deep, I don't know, but then I think you're going to bottom and go make a new high, and then I think the market will top. NASDAQ 100 down 0.73%, down 170 points. Look at this again. NASDAQ 100, you got the peak here. Get back above the upper band, you couldn't do it, and you drop below the 10 and 20, rallied back up to the 10. Now we're getting rejection at the 10 and the cloud, just like on the S&P. Over through the 10 just a little bit. Again, filling the gap. Getting rejection once we fill the gap at the 10 period moving average. Again, likely headed towards the 200, towards the cloud. Again, maybe just beyond the 50. Maybe it's more of a shallow retracement we'll be watching. I do think, again, a larger divergence, much like over here between the December peak and the February peak, is likely under construction. That would take us into September or October, where I think we'll see a peak. So again, I think you're going to see something like this to complete our primary wave 4 and 5, and then I think that will give us a cycle top on the NASDAQ. Same thing here. We had our diversions on the MACD. I'll be watching. Do we try to firm up around the center line or just under it if we try to bottom out? If we go into negative territory, you get a bigger sell-off. But again, I wouldn't be surprised to see something very similar to the diversions that developed over here, where we had this divergence, but we build upon it. Same thing like over here with the RSI. We have extreme, but we built upon it and ended up forming this large divergence. I think you're going to see something similar to that. But like I said, with the S&P, I do think we'll go higher than the December peak. We went just slightly above it here. I think you will go towards the trend lines I'm talking about in the weekly time frame to top out with NASDAQ and S&P 500.